Greetings, Scott Nelson, Senior Wealth Manager with Boulay Financial Advisors, and I'm back again, this time with your market and economic review for the fourth quarter of 2021. We at Boulay would like to wish you a Happy New Year and hope that only good things come your way in 2022. And I can assure you that we are all as tired of these COVID variants as you are. So let's go see what happened in the fourth quarter. Let's start with the economy and a review of the unemployment picture. Remember that we started 2020 with an unemployment rate under 4%. The COVID pandemic shutdown briefly pushed that above 14%, but by the start of 2021, the unemployment rate was around 6.4%. Now, by the end of 2021, in the fourth quarter, that rate was again below 4% at 3.9% in December. But despite the return of low employment, this is quite a different job market than one we had 2 years ago. And that is because there are a lot of people who have yet to return to the workforce. The graph above shows the percentage of U.S. adults over age 16 taking part in the workforce. The level was around 63.5% at the start of 2020, and you can see that since the pandemic shutdown, it has been slowly inching itself back to 62%. Being off by 1.5% may not seem like much, but in a country of over 300 million people, that means that there are well over 3 million people who have not returned to work. And that's despite there being over 10 million job openings at the moment. It's a complicated picture, with many folks having their own reasons for staying out of the workforce, but this situation plays into the other big economic issue of the fourth quarter. And that's the resurgence of inflation. After a summer of inflation hovering around 5%, that rate went higher in the fourth quarter. The Consumer Price Index hit its highest level in nearly 40 years in December as the price of the basket of goods the index tracks increased by 7% on an annual basis. That basket includes things like energy, automobiles, and housing, and those are the biggest influences of the index. But the logjam at ports due to the shortage of dock workers and truck drivers is also a factor. Some of these issues will work themselves out in the coming months as ports get cleared and more oil pumps come online. There's also signs that the computer chip shortage may also be easing, and that will please electronics, appliance, and automobile shoppers alike. The housing situation, though, that's likely to take several years to resolve itself. Despite the inflation news, the stock market enjoyed a strong fourth quarter. The broad stock market index, represented by the Russell 3000 index, rose 9.28% for the quarter. That's over 25% for the year. The U.S. stock market now has averaged over 25% annual growth in each of the past 3 years. Now, global stocks were positive, but not as strong as the U.S. market in the fourth quarter. The MSCI All-Country Index that excludes the U.S. was up less than 2% for the quarter and a bit under 8% for the year. Government intervention in China and in certain industries and the debt issues there dragged Chinese stocks down over 20% for the year. And that helped push the MSCI Emerging Index down 1.3% for the quarter and down over 2.5% for the year. The bond market was flat for the quarter, despite the inflation news and the Federal Reserve's announcement that it would be ceasing its bond buying program, which had been supporting the bond market, and was considering possibly raising interest rates 3 times in the coming year. The S&P Aggregate Bond Index was down ever so slightly, while the S&P U.S. Government Bond Index was essentially flat for the quarter. But for the year, government bonds were down approximately 2%, and that's their first down year since 2013. Investors hungry for yield loaded up on riskier bonds in 2021, which made the high-yield sector the best performer, with a 0.6 of a gain for the quarter and a 5% gain for the year. Looking forward, there is hope that we are close to being done with all these COVID surges, and things could start get back to normal in 2022. When they do, we should see a healthy rebound in travel, dining, and the entertainment industries. Easing supply shortages should also make it easier to shop for everything from cars to bikes. But it's also going to take some time, And with 2 years of pent-up demand, there's going to be issues. Some items might sell out as soon as they hit the shelves, and many businesses are going to struggle to get enough staff. So there's likely to be many more opportunities to work on our patients in the coming months. Well, that's a wrap on another market review. As always, if you have any questions on the topics discussed, please reach out to your Boulay advisor. If you do not have a Boulay advisor but are interested in how we can help you, contact us at learnmore@boulaygroup.com or at the number above. Until next quarter, continue to stay safe and best wishes for a prosperous 2022.